What's going on, everyone? My name is Kenneth Beard here with Stock Indices, where I go over the overall stock market and I go over economic data and put that together to make an overall assumption to give you all informative information so we can make money making trades. So, today is Wednesday, October 13th, and we have a couple economic indicators here that could have a big impact in the market. I know that the FOMC, the Feds, are speaking today. I'm not currently watching that meeting, but that those meetings, as I say in all my videos, whenever the FOMC, whenever they have any type of meeting, those tend to put volatility into the market. So if you want to, go ahead and watch that. By the time this video gets uploaded, though, it'll probably be already over. But that was today. We had core CPI numbers come out. Previously, they were at 0.1%, and they were expected to be at 0.3% this month, but it went up to only about 0.2%, which is a increase, if not anything, because we know with the core CPI numbers that those numbers give us a gauge as to the price and the inflationary numbers and goods and services. So core CPI numbers, those being released uh, just a percent higher, or just a point percent higher, does have an impact that is showing us that the cost of goods and services in the United States are going up just a little bit. Not anything too drastic. Like I said, it was expected to be 0.3%, and that number actually missed, which is good. So we want to see the core CPI numbers not be too low, but certainly not be skyrocketing. So with those numbers, still we're sitting around that moderate level. For the consumer price index, though, we went up another point percent to 0.3% to 0.4%. It was expected to be 0.3%. So those numbers look the same, as the core CPI numbers. They're not quite different. So, consumer price index and core CPI go hand in hand. They really are the same thing, just having different names. So we had a couple of we have a couple of governors speaking. We had Fed Gov Leo Bernard speaks, and the Fed Gov Michelle Bowman. So that's at 8 p.m. and 4:30. We may see some aftermarket volatility come in when she speaks, and as well as with Lael Bernard. I think that's how you say that name. But that's all we got for today. Not too busy as far as economic data. So we're going to go right into these stock charts here. We're looking at, first thing we're going to look at is the volatility, because we know that's the biggest thing. Volatility is fear in the market. And like I say in all my videos, that is how you gauge whether or not the market is having any fear. And when fear enters the market, that lets us know that we could potentially see, a downtrend or a turnaround, and from bullish activity going into bearish activity. So I'm looking for it here. I just typed it in. Okay. Okay. So looking at the volatility index here, we can see that volatility is shrinking right down below this level I have in place here at 1997. You can just call it at 20. I have that level there just because whenever I see volatility below this current level here is when the market is either bullish or making a turnaround from bearish to going into a bullish territory. So we're previously we were at these high levels around 24, 25-ish, and we've slowly just been decompressing from those levels. And let me move myself out the way. We've slowly just been decompressing from those levels. And so that is showing us that volatility is now leaving the market and rotating elsewhere. So as far as the major indexes, we could see start to go back to higher highs and continue that uptrend that we were seeing for such a long time. So volatility, yesterday, well, 2 days ago, we were seeing, this indecisiveness, but it didn't do much and it didn't sustain or hold any level. We didn't hold this 20 level and bounce from here and go back skyrocketing up towards these higher levels. It just had this indecisiveness, which was showing like we don't really know exactly what's going on. But the market ultimately just is now going back into those normal volatile levels. The next thing that we will be looking at is the ES mini futures, the S&P 500. And as you can see here, we had this downtrend. I have this trend line right above this retracement level. And the retracement, what we got here previously is bounces off of the 50 and off of the 21 moving averages. And those were pretty consistent. And then we saw a break below both of those moving averages, and we have a downtrend right now. And the downtrend is having this overhead resistance here. And I said in my Sunday video that if we open up and close below the previous low day, that we would see a downtrend and maybe potentially get down to this previous support level down here at around 42.59, 42 whatever down here. But we're not seeing that right now. It looks like the market, it did sell off a little bit. Volume wasn't that high compared to the previous. Like whenever you see a downtrend or any sort of big dip or any type of volatile swing towards the downside, you want to see the volatility or the volume in this instance start to go up. That's confirming that bearishness and selling is actually entering the market, because usually when markets are just uptrending normally, you don't see that much volume. You just kind of see a steady uptrend, pullback, uptrend, pullback. That's what normal market conditions look like. But when you see abnormal, negative news-based catalysts surrounding a drop in price, you tend to see volatility spike, as well as implied volatility. Now, implied volatility on the options here are back down to these low levels. We see about 16%, I believe, and you can see it here as well. If you look down on my implied volatility graph down here, you can see we had like a tiny increase, and then we had the IV crush, and it went right back down to now its normal levels, which is leading me to believe that this current downtrend, this current bearishness that we're seeing in the market, could potentially be over. Now, that's not saying that it is over, because we haven't got that confirmation yet, but it could be over. So for anybody still short on the market, anyone who is still looking to take the downside or having downside protection, get ready to liquidate your downside protection and lock in any profits that you have towards the downside. Because if you don't, you can be caught in that break towards the upside, which looks like it's going to happen anytime soon. We still have levels that we have to get above. We have to get above the moving averages, which could act as resistance, and we have to get above this just current resistance level here, which hasn't been hit yet. But it could, double top here. It's a lot of things that could happen. It could double top. It could fake out and come back down, which is still a double top, or it could just consolidate sideways from here. It may look like it's going to go up, but it may just consolidate and slowly just go steadily in one direction towards the side, or it could have a green day today and tomorrow unexpectedly see a red day tomorrow and continue to make lower lows towards this 180-day moving average. But as of right now, if we go to a smaller time frame, I'll go to the 1 hour. We can see that today the markets opened up, and all we've been seeing today is strength. We're very close to that trend line, and all we're waiting for is some volume to kick in here. Like I said, with the core numbers, the core CPI, the inflation numbers, they're not drastically, it's not something that's dragging the market or anything like that. So, um, as far as downside goes, I think that may be over, but I could be wrong. We have to just wait for the confirmation on that. So that's for the S&P 500. For the Nasdaq, the QQQs, let's go to the daily chart. For the Nasdaq and the QQQs, we're seeing a little bit of the same thing here. Seeing some buying pressure holding up that downside momentum. So we haven't seen anything like that. I mean, we've seen something like that right here, where the market saw a little bit of a hold, but then continued to go down, but it didn't last that long. So when you see these higher highs being put in to the market in a downtrend, that is kind of confirming that that downside pressure, or whoever's on the offer side of this market, is they're starting to get hammered, and it's not enough supply. Uh, supply, when demand is overdoing the supply, we're going to have a shift in momentum. Excuse me. So we're seeing a little bit of the same thing for the Nasdaq. So we're seeing the overall pattern here start to follow itself. The next one I'm going to be looking at is the Russell 2000. So the Russell 2000 is really interesting to me. You see that it's just having this sideways movement. And I've been talking about it. If you're good with option strategies, you're good with butterflies, iron condors, and straddles, and things of that nature, or even writing calls, writing puts, you can make money on this doing absolutely nothing, just passive income. It's a beautiful stock to just take advantage of the theta decay if you know what options is. If you don't, I'm working on a course currently that I will be dropping, and they teach you all about options, Greeks, option strategies, and things of that nature. So if you don't understand that, stay tuned, because I will have a lot of information in regards to that coming soon. But with the Russell 2000 hasn't been showing us anything besides staying in this range, and that's really all I got to say about this. It's in this like $80 range, 80 to 180, $100 range. Or range. The entire range though is about, I don't even know. Let me use my. The entire range is about $178, but it hasn't. It's kind of like I said. It's giving us that balloon effect where you got some water. Imagine you got a pool, you got a balloon, you inflate the balloon, and you take the balloon, you put the balloon in the water. What's the balloon going to want to do? It's going to want to press up against your hands because it wants to, you know, the water has more density, and so it's going to try to escape and come back to the surface. It's kind of like what this is doing, especially with the 180-day moving up towards it. You can see how the 180-day is starting to almost make contact with price. Once that happens, and the market, the broader markets like the S&P 500 and the Nasdaq start to make higher highs once again, I think that the Russell 2000 will also make its 52-week high, which we haven't got right now. And it's going to be a pretty big explosion for how long this index has been in this consolidation period for. So watch out for the RUT. The next one I'll be looking at is bonds, bond futures. Yeah, this is bond futures. This is the 30-year U.S. Treasury note. We can see here yesterday we had a pretty big up day. We moved up about 1 basis point on the bonds. Today here we're moving up about another basis point on the bonds. So we're moving up pretty aggressively for bonds, which is showing us, when interest rates are going higher, that is what we're seeing here. When interest rates go up, we see bonds fall. So we're seeing bonds have this aggressive upside, which is showing us which is telling us that the Feds are currently trying to decrease interest rates. which is good for, as you know, borrowing money from big banks. So, whatever they're trying to do, they're trying to put this market, disaster that we almost had. They don't want a recession. So whenever we have any type of economic roughness, they tend to lower down interest rates to kind of put the market and the overall economy itself back in that stable condition. So here we're getting aggressive upside on the bonds here, and which is good for the overall stock market, which is also confirming that downwards trend that we were getting in the S&P and the Qs, it could be confirmed once that break of the trend actually happens. So that's it. That's all I got for you guys today. If you enjoyed this video, leave a like, comment, subscribe. And I make these videos for you all so you can get informative information and so that you can get a little piece of my mind as to what I'm looking at when it comes to the stock market. I have been participating in the stock market for quite a while now, and so I know certain things to look at. And so, I'm sharing that with you all. And if you enjoy this type of content, like I said, subscribe, leave a like, comment anything, any questions that you may have. And I'm gonna have a video, one of my other videos in a up right corner. Click that video, watch that video, because all my other videos are gonna have informative information like this. And so my channel is just based around finance education and understanding these things. So see that video up in the right corner, click that video, and I will see you all in the next one. Peace.